Yes, man. What's going on? Hey, my name's Gerald Peters. Welcome to the channel. It's not even the channel. This is the petersreport.com, man. And I appreciate you guys. Anybody watching this, you exchange a little bit of money with us and are on our subscriber base, man. And I hope that I can help you. I hope we bring some good information to you. We got you on the trade of the week. Starbucks 2 weeks ago, Chevron this week. That's moving up. I hope I've had you on the right side of the trade. Stay bullish, man. That's your edge. Today, if you got a small account, if you're trying to learn this trading game, you want to spread some money around into different trades, different sectors, but maybe you ain't got that much money. That's what we're going to get into today, man. Let me pull up. Hold up here. Let me pull up some charts, man. What we're going to talk about today is leveraged funds. And there's a couple ways of what I'm talking about. Now, here's the thing about leverage. All right, we're on. Hey, hit that QR code. Scan the QR code for GP's trading course, getting started with stock charts. If you're not where you'd like to be with your swing tradings for beginners, intermediate, stuff's on sale. Enough of that. Listen, here's an example. This is the AGQ. I got long this the other day. We were having a meeting, MFG traders here at my thing, and we're going through the whiteboard and we're looking for trades. And I said, silver, man. I didn't want to talk about anything else. I could see it. We had an anchor point. Price bounces off the 200. Trigger, possibly breaking this downward sloping channel. I don't want to buy the SLV, right? The SLV is SLV, right? So you're talking about going from $26 right here to $28. Okay. But what is this? From $35 to $43. Much bigger. This is a 3 times leveraged ETM by ProShares Ultra Silver. Okay. There's ones for gold. We got them for Bitcoin. We got them for index funds. The S&P 500. We got the UPRO. So 3 times. There's now even a 4 times. I haven't had a chance to get in it. Meant to on this last pullback. Just didn't make it happen. I got money in UPRO. I got money in TQQ. That's the NASDAQ. It's a triple leveraged fund. I mean, every dollar you put in is 3. Now, I want you to think about what I just said. You don't have to go borrow no money. Now, there's expense on these funds. Now, conventional wisdom says, and hey, maybe they're right. I don't know. Conventional wisdom says don't hold these. I'll show you something that I did. Where are we at, man? Pull up. Oh, you didn't see my password. Pull up. It's a private video anyway. All right, this is Sky Dweller Fund. This fund is made up of triple leveraged funds, okay? Triple leveraged. Now, this was based around Ray Dalio's all-weather portfolio. I since expanded it to bring in new products, man, Bitcoin. So I used the BITO. At the time, this thing gives a big fat dividend, and it moves relatively to the price of Bitcoin. In Ray Dalio, he had gold. I don't want gold. I want the new gold, Bitcoin. So I did BITO to give this portfolio dividends. TMF, okay? You guys all know the 20-year Treasury bond, TLT. They say everybody should have bonds in their portfolio. Bonds have done terrible, man. Let me add this stage back. I'm sorry. I messed you up there. Where were we? Hold on. Give me just a second. Come on, man. Where were we? All right. Sky Dweller Fund. This is a public fund that I have on display for my followers to show them what I was working on. What I was testing out is this idea is, can you actually hold triple leverage funds? So if the S&P 500 does 5%, these funds do 15%. Same to the downside. Leverage ETFs are exchange traded funds that use a combination of derivatives, oh, this sounds good, and debt instruments to double or even triple the movement of an underlying asset or index that it tracks. Leverage ETFs have grown in popularity with the day trading crowd because the funds can generate returns very quickly, provided, of course, the trader is on the right side of the trade. Peter's report is about what? Getting on the right side of the market. In this article, we'll look at some of the most popular ETFs. Now, so here you're going to see some. So watch this. UPRO, S&P 500, okay? Right here. UPRO, S&P 500. Now, this fund right now, Sky Dweller Fund, has $26,000 in equity in it, okay? Of that, $4,437 in cash, guys, in cash, okay? Plus, I got some margin available to me. And where is it not going to have it on here? Okay, I'm not used to looking at this on the computer, man. I'm used to looking at this on my phone. Leverage portfolio made of the S&P 500, the NASDAQ, the Treasury bonds, Bitcoin, and options income on the market index of UPRO, TQQ, bonds, BITO, QQQY, and JPY. QQY and JPY are brand new products. I took profits from Bitcoin because in BITO it was up 177% and it has a 47% dividend. This is also a debt instrument derivative of the price of Bitcoin. These are leveraged. Go out, read about these things. And I borrowed against the fund to buy that, took profits from that, and bought the extra income to put into this fund. It was a 4, now it's 6 instruments here. Here's what I want to show you, though. All right. The 1-year money-weighted rate of return, 63% return. Year to date, 23%. Right now, 23%, okay? Now, here's the QQQ, the NASDAQ. Here's the return. Now, look up here. What does it say? 1 year, 23%. 3 year, 9%. 5 year, 20%. This is the average, okay? Now, watch this. The TQQ ProShares Ultra QQQ. This is a 3 times of what we just looked at, the NASDAQ, which has all those big tech stocks in it. What's the 1 year? 53%. What was the 1 year of the QQQ? 23%. Not exactly 3%. These instruments, because they're derivatives and created with debt products, they're not exact. You also have time decay. You also have erosion. You also have the law of numbers. As you go down, it takes more to get back up. Here's how I think I've been able to be profitable. This portfolio has a 14% dividend yield. It has bonds. It has Bitcoin. It has income. It has S&P, has NASDAQ, and it has bonds for protection in the downside. That didn't happen in the first couple of years, but Bitcoin stepped up to do it for it. That's what made me realize, got to have the new gold in the portfolio. Gold would have done fine too. We could have used the UGL 2 times gold. These funds allow smaller players to take less money, put it to work, and get more bang for your buck. Or if you just want to take big positions without borrowing money, without using margin, you can double your money, double your trading, double your swing trades, okay? This is a triple. We got long this. I got long right here. I've been saying well, look, man, we're already up almost $2 a share just from entering. These funds are highly leveraged both ways. Now, what are we doing right here? What I want to say to you is I'm going to show you some different ones. There's brand new ETFs that are out, they're 2 times leverage. Where's this? Guys, these are 2 times leverage. Individual stocks. Apple has what is it? AAPX. 2 times Apple. TSLL, 2 times Tesla. AMDL, 2 times AMD. So here I was on that trade today. AMDL. We've been riding this up. Anchor point. Watch. So I trade these the money flow way. Stage 4 decline, right? Stage 1. Anchor point. Could have been an anchor here. If you broke down in that and that's an anchor, then here's your next buy signal. You didn't lose much. You're about to make it back. Honestly, I held that. Why? This sell-off here. Let me add stage back. Apologize for that. Here we are. That's what I was saying. Stage 4 decline. This is a 2 times leveraged. The granite shares 2 times long AMD. This is the stock of AMD, guys. So watch. Let's look. Apple, AMDL. Right? Oh, no. Let me pull up the real stock. Sorry. Sorry. AMD. Actually, if you're in the money flow trading system and you go to the public chart list and you go to the MFG trade ideas of the week, if you trade inside Discord with me, get on this and let me show you. I got the chart all marked up for you, man. So I know all you guys here are on my trade of the week, right? And that's cool. And I'm going to put in the numbers and we're going to try to make it as simple as possible for you. All right. And this is just some stuff I just want to teach and share with you some of the bigger things that we have going on here. This is the Amazon 2 times. Whatever Amazon does, this goes twice. So look, anchor point, stage 1 buy. Now we're getting to stage 2 breakout. All of that is from this right here in my book, The Money Flow Trading System. We're just watching the pattern, man. Stage 1 setup. We know we got an anchor point. We wait for up to 3-4 bars, right? We get stage 1. Here's how you offset the erosion of the 2 times down and the erosion of the cost of buying the futures and creating the debt instrument and the derivatives is I want to add on stage 1s. So no, I can't just buy it and hold it. I can't buy and hold it and buy the S&P and hold it and think those are going to line up, man. It's not going to happen. Plus the S&P is going to throw in dividends. Half the returns come from dividends. These funds may not, UPRO doesn't have much of a dividend, okay? So think on that. It doesn't have as much a dividend. But here's what I figured out. And the reason my account that went up there is up 20-some% is the way you offset it is you add money, whatever you can do, share count on the stage 1. You add on the breakout if you want, or just stage 1. I like to do both. I used to do half in stage 1, half on the breakout. Right. And then I might I might stagger my stops, manage the trade, man. See, the great thing about the stock market is like, it's really hard. But here's the other thing, because it's really hard, few people can do it. And that's what makes this reward so large. You got to practice your strategy, your system. We're going to offset the erosion that comes with these. Watch. Look at this. NVIDIA. This is the NVDX 2 times. Year to date, 337% from NVDX. Right? So let's close this down. NVDX. Come on, man. Look at this. If you trade with the money flow, look. Boom. 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 There's your anchor. There's your breakout. We're taking some down. Boom. There's our 3. Boom. Our stage 4. Boom. Our anchor. We're entering. Right? We already got people in Discord, man. Oh, I did it again. Sorry, man. Oh, let me start this over. I did it again to you. All right? Watch. You say leverage fund. Every dollar got you $2 grand Why don't you put 10 grand in with me and we're going to buy this stock? And I'm not going to share any of the money with you. This is the same effect. If you put 10 grand in NVIDIA and went to the bank, borrowed 10 grand, and now you got 20 grand in NVIDIA, but you owe the bank, you created 2 times leverage. You understand that, right? Well, that's what this is. Except this, we don't need the damn bank. All we got to do is what? Watch the 4 stages of price movement, man. Once we can identify stage 1 accumulation for the period that we're trading and the breakout, and we can identify the stage 3 with some semblance of a repeatable fractal pattern, because we can do that. And we can identify the stage 4s. Well, then what? I want to trade around the position. I want to trade around the position. So this is what I'm doing. I want to be in a full position, probably taking some down, pops up, I'm back in. I'm taking some down. I'm taking some down. We're back in, taking some down. We're probably either out or back in right here, right? And what am I doing here? This. But this isn't the only stock I'm doing. I might have this going on 6, 7, 8. As you make profits, you roll it forward. So you're constantly doing homework, looking for different things in different sectors. Like what? Let me show you. All right, that's tech. A lot of these are running together. Go over to my public chart, not trade of the week, if you guys are on trade of the week. This is from the MFG Discord. Look at Brent right here. Okay, here's oil. Puts in a bottom, stage 4 decline. We get a stage 1 trigger. We don't know if it's going to go up. We're playing the odds. We believe price, once it does this, will be drawn to where it was before. Okay, we feel it'll be drawn. There's this natural pull. Part of what the money flow and I teach with the 4 stages of price, accumulation, markup, distribution, right? Mark down, those 4 stages that looks like chaos, but every day we're getting more information in this ongoing feedback loop. So as we can use our brains and we go in here and say, listen, I don't want to borrow money from the bank, but I would like 2 times Amazon on my swing trade. You're not on margin. You're not losing. You're not using options. You know, this could go from $30 to $40. That's a big return in a short period of time if you get it right, if your trading skills are there. So look at some of the companies we have here. Apple, you see I marked this chart up. Stage 1. Here we go. Do it again. Stage 1. So 2 times stock ETF. These are all the stocks that have a corresponding ETF that's 2 times. Indexes can be 3 times. Oil, 2, 3 times. Go look at OILU. That's oil, 3 times. Different indexes, consumer staples, Mexico, Brazil, bonds, everything has a 2 and 3 times leverage. So a lot of different ways to play these things. Here's Apple. This is a new AI one. I don't know much about this one. Here's AMD. We're in this one. Running to the previous high. Look, guys, if it goes from here to the previous high, that's a 100% return. So if AMD runs 50, this thing runs 100. You turn your 1,100 into 2,000. Come on, man. Come on, man. Amazon, obviously that's if trade works, okay? But we're trying to be optimists. Why would we want to do this if we're not expecting some positive expectation? Paper trade it. Prove me out that I'm right. Look up these stocks. Go to Granite Shares. Go to the people that produce these. CONL, 2 times Coinbase. This thing was at $80-something. Now it's back down to 35. So you may have owned it for a while. Maybe you have some erosion, but you're just walking in. You're picking it up here. It could run up to 50, 65, or maybe it breaks down. That's why you got to manage the trade. And so we want to identify stage 1s. Put money on. If it breaks, get out. Take the hit. The way we make our money, stay with that same stock. So follow 10, 15 of these. Follow a couple indexes, the UPRO, the TMF, UGL, BITX. Trade these funds. Use your swing trading skills, right? If you're not confident in them, seriously, hit this QR code, man. I got a simple course, breaks down the money flow, 12 videos, 50. Man, I'm telling you, we'll get that out of the way, okay? So the way we make these work, man, is And okay, that's the stock ones, okay? I hope you see there's just tons of them. And so what I'm trading, I want to observe the stage 4 pullback, right? I want to see that happen. This here, I want to watch it. I want to be able to identify it. I got to be in flow with the market, okay? And because these things are 2x, we're getting a bang for our buck. Because we're doing on a daily chart, you can have a full-time job. I'm going to have to go and change my thing now. But look right here. Money weighted return, 23% for the year, man. Year to date, crazy. Let's do 1 year. 63%. The only reason this worked, leverage. And I continue to add. I took down leverage on the stage 4. And if you go look, you'll see this on my thing. So watch the Peters report. Watch. I'm a little behind. This runs behind compared to the real time, which is with our Discord and my text alert. So anytime I make a move, I text my friends and the family and people in the money flow gang. So if you want to, in on that, hit me up, man. Let's see. Taking a swing at Sophie. Let's see. Taking profits in TMF 8.5. TMF is a leveraged bond fund. Let's see. View all. I guess I take it down. Let's go with the unleveraged, but you'll see what I mean. Okay, so 8.5. Come on, man. Right. Making sure we're on. Come on, man. That's right here. That's 8.5. Now, why did I take this down? Basic chart reading, man. Stage 1, 2, 3, 4, pushing up against resistance. Price had been here before. One of the main concepts between the money flow trading system is that 70% of the time stocks are going up. I remain bullish at all times because the odds are in my favor, right? Any sell-offs, all I do is watch and wait. If I'm position trading, if I'm trading these leverage funds, I get out or I cut the position in half or 75%. You can do it in half. That's what I do in M1 Finance. So over here, okay, bonds I'm taking. So over here in TMF, I'm taking gains, okay? Why? Because look, let's do UPRO. This is the 3X for the S&P 500. Let me see. Let's see what's up on 8.5. Right here, guys. Absolute bottom. Taking profits in bonds. They went up. Triple bonds to add to the bottom of the S&P 500. Triple. So if I took off, and you don't even have to get this shit perfect. Get what I'm saying? The few times you do get it, you offset the erosion massively because you only have half the shares when it comes down. What did I get here? An anchor point. I need 1 bar, 2 bar, 3 bar, 4 bar, and I need it over the 5. That's my trigger. So I avoided this. That's not a lot, couple bucks, whatever, but that offset the erosion. It allowed me to lower my share count. I lost less money going down because I had double the shares going up. Now, listen, I know this is not going to work in every scenario, but the times it does. Essential principles of trading. Let your winners run. The stock market goes up 71% of the time or 70. Let the TQQ run. That's why it's up 60%. Right? And when it comes down, cut it. Cut your losers. Manage risk. Share size targets. And we do all this. So what I'm telling you is you run the money flow. And here's the thing. You cannot hold leverage funds if you are not going to add. Okay? Let's just get that down so this video doesn't go ever. Do not hold leverage funds as a pure buy and hold play, where you just buy it and you just sit on it. Time decay, erosion, the cost of the derivatives, the big down moves, it won't work, man. It won't work. I don't think it works. The reason it worked for me and the reason I'm up is it worked in a strategy where I continue to add. I'm adding a consistent amount of money. So in this account, the Sky Dealer, every day I'm putting $25, $25. Well, what if the U Pro's going up? We don't do anything. So if it's just I'm just adding money to the account. Why? Stage 4 happens. Bam, I sell some. What now? It comes down. What? I'm looking to put it back on. I start dripping it in. It's not perfect, right? But as I get money in, that money is running 3x up. And it built the share count, offsetting it. So if I can offset some of the loss of the stage 4, get in earlier, close, and ride it up 3, I offset it. Maybe I don't get a full 3, but I get a good 2.5x return on money I don't have to pay interest on. So think about that, man. Money you don't have to pay interest on, bro. You know, like right here, I was saying, any of this we can avoid. You got them for all the indexes. The ones I'm most excited about for you guys, being able to play with small accounts, man. Look at this, $28, right? You can buy 10 shares, $280. 10 shares, $36. If you hit it, it's, $360. It runs up to $500. You're trading. That's trading, guys. So you can have 5, 10 grand and you can trade 10, 15 leveraged funds, indexes, oil, gold, Bitcoin, stocks. Man, you got to get in this. And if you want to play speculative, these are what you use. Don't buy Tesla, buy 2x Tesla. Don't buy Amazon, buy 2x Amazon. If we're speculating, if we're trading, buy and hold, buy the regular stock, put it in your damn account. Okay? And now we ain't even got into all the other derivatives and the options incomes and the dividend, all that. We ain't even got into that. This is just 2x funds. The way you win, I believe you can hold a TQQ. I believe you can hold the U Pro, the TMF, gold, Bitcoin, all that. You've got to downsize into a stage 4 decline. You've got to be disciplined. You've got to be able to identify as an anchor point, a stage 1, and then a breakout and a run. And you got to let your winners run, and you got to cut it when you're losing. And if you follow a basic system of that, it could be, maybe you don't even do all that. 70 plus RSI, you start downsizing. 30, below 30 negative RSI, you start adding back on. It ain't that damn complicated. The rest of the time, the money's being, you're holding 6 positions. Okay? That's just called fucking trading. Man, I hope this helped. If you get over here, we will send you I'll put a list of these stocks. Most of you probably know them. I will get a list to you. I will put it down here and here, but it's Apple, Baba, Coinbase, Facebook, Google, Microsoft, Nvidia, and Tesla. Okay, the big ones. And then the ones that I like, the TQQ, the U Pro, all that stuff. But they have them for everything. Get out there and look. Create your own folder. Create your own strategy. I'm going to trade these 10 leverage things. This is how much money I got. This is how much I'm going to allocate to each trade. You see what I'm saying? We could do that, man. You could do that. Allocate some of these trades and then get out there and start trading, making some money. And now, your trades are $500, $1,000, and you got 6, 7, you got different ones that are uncorrelated, bonds and gold. That's trading. And get that in your system. These new funds open up the doors for us, man. We get leverage without borrowing interest. Man, it's a beautiful thing. And down the road, let's get into that, man. Let's get into how to use and borrow, man, and get into more. Hey, without risk, there is no opportunity. These things are risk. I hope I got you fired up. I hope I got you thinking about these leveraged funds. I hope I got you wanting to trade, make some fast money, and be a dividend investor at the same time. God bless you, man. I hope you're doing well. Hey, anything I can do. And hey, I greatly appreciate you being on this and supporting our cause and letting us know. Click like on everyone you get. If you didn't click, go down the list and click and leave a damn emoji. It lets my writers know. And the reason MFG trading research team know that you guys care. If you just read it and move on, they don't know. Click the damn button. Say something, man. Tell them to go eat. Tell them whatever. Tell them you appreciate them. But I appreciate you guys. God bless.